in telling the people that eagles are too expensive, silver eagles. And I have in stock 70 or 80,000 of them right now in stock. People want them. I have them right now, 2022 ZAM backdates. But I don't tell the public to buy them because the premiums have been so high.
We also had a question. You just mentioned that Miles Franklin is one of the only 27 mint authorized resellers in the country. There was a question submitted last week, which we didn't have time to get to, which was from a viewer saying he had seen on another channel that the mint authorized buyers, which is even a smaller group, I understand, is able to procure American Silver Eagles, for example, from the U.S. Mint for between $2 to $3 range, whereas the mint authorized resellers, we're buying them back from the public at $7, $8, whatever dollars more over spot. It was been as high as $9.75 a month ago. So how is it that Miles Franklin is facing those kinds of premiums from the higher in the food chain from the mint, and also when we buy back from the public? Is it true that there are these so-called mint authorized buyers who are able to get eagles at significantly lower premiums?
They are, for sure. There are a handful of them, and you have to pledge at least $50 million to the mint to become a one of the 6 primary dealers. And I'm going to defend them for a moment. And I have no incentive to defend them other than to say they see what I see, and they see a incredibly difficult time getting product. So if they sell out everything they have and make $1 an ounce or whatever, instead of jacking it way up to where they're selling them for, what are they going to do when they can't get any more product? And so premium is a function of supply and demand. And I've been very consistent on this channel in telling the people that eagles are too expensive, silver eagles. And I have in stock 70 or 80,000 of them right now in stock. People want them. I have them right now, 2022 ZAM backdates. But I don't tell the public to buy them because the premiums have been so high. And that's to my own detriment, where I'm sitting on a huge amount of silver eagles going nowhere. And I can't hedge that premium. I can't bring myself to sell them, but that's what I am paying for them. And I'm buying them back from the public for $7 or $8, as you say, over spot. The point of it is that you have to wonder, if you're the primary distributors, where's my next lunch come from? And so if you're uncertain, and they have been incredibly inefficient, the mint has, putting out far less demand or product than is demanded, I don't blame them for doing it, because when they sell out, getting product is not a sure thing. And getting gold eagles has always been no problem at all. Well, now the mint says, oh yeah, and they haven't even sold a ton of gold eagles. Well, we're going to cut supply by 1/2 for the rest of the year. Do they see something coming and they're trying to mitigate? I don't know. But all I can simply say is that the U.S. Mint is the only mint that they're doing this with. Those same primary distributors are primary distributors for the other major mints as well. And so, they're not doing this with Britannias, Krugerrands, Philharmonics. They're not. And so, or Maples even, which are a little higher, but they're not. And it's because the U.S. Mint has been horribly inefficient. And if they were to sell out at a certain price, they're not getting more. So this is a market-driven phenomenon. This is supply and demand. This is capitalism. And if you don't want to pay those high premiums, buy something else. And the same thing is true. When I buy back from the public at $7 or $8 over spot, I can't hedge the premium. I'm naked exposed to that premium. And so are they, I guess, if they're buying back as well. So anyways, they may pay $3 or whatnot from the mint. They're going to pay me, if I sell back to them, $7, $8 over. So they're making it while they can, where they can. And I think they see the same issue I do, where supply becomes a problem. And this is how markets work.
I guess one thing you didn't say there, but I think is worth restating, is that Miles Franklin is not making those huge high single digit or beyond markups. We're in the very low single digits. And you mentioned a couple of times premium hedging. That's the last viewer's question we wanted to touch on that we got submitted this week. Dan asks, Andy, I have heard you say many times that you can hedge the spot price of metals, but not the premium. So here's a hypothetical question. Suppose the spot price of silver is $50 and the premium on a 1 ounce silver eagle is also $50. Can you continue to buy and sell American Silver Eagles where premiums equal 100% of spot?
Yeah, that happened in 2008. In 2008, and this was written in Chris Marcus's book, The Big Silver Short, or The Big Silver Short. So anyways, in 2008, we had $21 silver. It fell to $9 in about a week, and it lost 60% of its value. And when the markets finally opened up, you were paying $18 for Silver Eagles and 8 to 12 week delivery delays just to get them. You were paying 100% premium, 100%. And I envision a period of time where you will see that once again. So yeah, we can. You'll see widened spreads in that case, where the bid and ask spread are much wider on high premiums like that, because the dealer is exposed to that. So if I have, just so people understand, if I have 10,000 ounces of silver in my warehouse, I can sell 10,000 ounces on paper. So one goes up, the other goes down commensurate. We're always market neutral to the amount of silver, but when you add that premium on there, there's no way to hedge it. It puts us at risk. It puts anyone in this industry at risk. And there are companies out there who claim they don't hedge the metal also. Maybe that's true. If it is, that puts them at risk. This is not a business that is for the faint of heart. You have risk involved as a dealer. And, you know, those 90,000 Silver Eagles I have, you could argue that I have a minimum of almost $700,000 in premium risk that I can't hedge right now, just in that little portion of my inventory. So, yes, they'll still transact, but the spreads will be wider, so that if they're $50 premiums, you may only get 30 when you sell it back. So there's that $20 spread in there where you have a little bit of cushion, and that's commensurate maybe with the amount of risk you're taking by offering this to the marketplace. So anyways, yes, the answer is yes. It'll have to be probably a major company. This is the kind of environment that would put every small coin shop out of business like that. Every small business out of business quickly, because you have to have the bankroll to be able to do it, and you have to have the contacts to be able to do it, and the ability to move product fast enough so that when you do take in something from the community and pay a big $50 per ounce premium on a mint box of 500 coins, you know, that's 500 times 60, that's $25,000 premium that you'd have just to pay on the box. You'd have to have a big spread. So yes, but it will shrink the size of this market incredibly to just a handful of players.
I guess to corroborate what you just said about what happened in 2011, remember it also happened in 2020. We saw that in the March of 2020. Maybe you want to tell that one again. That's more recent in people's minds.
Yeah, in 2020, the price of silver went down to $12, and you were paying $20, $21, $22, $23 for anything. In some cases, you were paying a higher premium, like $13, $14 premium for Eagles with $12 silver, over 100%. So the answer is yes. It's not a market that is pleasant to be in, but yes, that will happen, I think, ultimately. And because I could argue the premiums when normal are too low. And so we haven't really found equilibrium between supply and demand, where I think we are ultimately heading, to be honest with you.
Yeah, I guess it all comes back to, and this gets back to the preparedness, scenario planning, thought experiments. It's like, what is the real risk that we will or won't have availability of anything, whether you talk about toilet paper, food, water, fuel, all kinds of things. Do you really know, people? Do we all really know what the risk is that we'll have access to those things? And what would be the correct risk-adjusted premium we should be paying in all of those areas if we knew the real risk? But we're all guessing.
Well, it's okay for people to believe that there's a shortage in baby formula and tampons, but that there could never be a shortage of precious metals. You know, where I used to live in Minnesota, Target is from Minnesota. The first Target, I believe, was in St. Louis Park, where I grew up. And the one right by my house in Minnesota, my wife told me her friends are saying they're out of tampons. How is that even possible? Out of formula and tampons, Target. It is. Supply chain problems happen, and that goes to show and that's something that women need, right? Well, what happens when people decide they need gold, and it's a very, very tiny pool? With all of this money out there that's been created and all the wealth that's been created and all the asset prices that are distorted, if a very small percent rush to gold, it'll be like trying to find baby formula at Walmart. Good luck. And I really do mean that. And I've been saying that forever. And I get a lot of crap for it because people think I'm just trying to push selling gold and silver, but I'll stick to my guns. I've seen it so many times in this industry where in years past when no one was buying gold and silver, the mints would run out of product in October or November. And there's been too many issues with getting product from an industry that is ill prepared to take on a whole bunch of more demand. So yeah, I think that is an issue and one that makes people wonder, I hope anyway, should I wait for that moment? If you wait for that moment and get it, you'll be lucky. It's kind of like everyone running through a revolving door at once. You got to be the first one through the door or you're screwed.